Silver, let's start there. It's called the devil's metal for a reason, trading about $92 an ounce this morning. It's about 3 times its 60-month moving average. We haven't seen that since 1979-80. And to tell you about the potential pain that the devil's metal could inflict, we closed 1979 at $32 an ounce, and last year's low was 28. So this kind of lessons in silver and precious metals, when they get this extended, is oftentimes you're supposed to be selling when they're yelling.
Selling when they're yelling. Okay, I love these phrases, Mike. One thing that's supporting the rally of precious metals and industrial metals is the weak U.S. dollar and this idea that the dollar will continue to stay weak. Is that enough of a reason to keep these prices from falling?
Scarlett, I appreciate you going there, but not really. The fundamentals for the precious metals are awesome. They were a year ago, the year before, the year before, and the year before that. That's the bottom line now. I have shifted over to a risk manager, and now that prices have gone up so much, I've been bullish metals forever, that you have to understand what it usually does. It's the most volatile part of the supply-demand models. Prices, when they rally this high, it brings on that supply, it curtails demand, brings on shifting, and rinse and repeat, and all goes over. The history of these type of rallies are, I get the fundamentals, we all get it, especially for silver, electrification, China, Mr. Trump. It's a good thing. The gold market loves Mr. Trump, but now it's just getting too stretched. So I think gold might see 5,000 an ounce this year. It might easily go back to 4,000. Silver might see $100 an ounce this year. It might easily go back to $50 an ounce. That's typically how it works when you rally at this velocity.
Mike, we also, I have to pivot a little bit to Bitcoin. We've seen it rebound pretty substantially. Do you expect that we could see record highs again? And what has been driving this recovery?
I do not. What's a notable bear on Bitcoin, I think Bitcoin right at these levels is a worthy short, particularly because it went down last year. It's bounced this year. It's giving you a chance to sell. I think a decent stop, meaning sign of being wrong and showing going above good resistance, is it can stay above 100,000. It might mean something. But one key simple little factor of pressure, Bitcoin and all the industrial metals, which includes silver, is just a little pickup in stock market volatility. And we're seeing that today, but it's only one day. It's only the second week of the year. So give this some time, and I think this it's just too much enthusiasm for a risk asset for Bitcoin early in the year. Worthy to test a short here.
Yeah, we know that you're a longtime bear on Bitcoin, so I'm not even going to ask you about the altcoins, which you don't see any reason for them to exist. Mike, I want to get your take on oil because those prices are rising, and in fact, oil is now at the highest level since October. So if you've been enjoying the low prices at the pump, that may soon start to move in the other direction. A lot of it is tied to just anticipation that the U.S. is going to somehow going to respond to the turmoil in Iran. And Iran, it matters here because it's the 4th biggest OPEC oil producer.
It is, but they only export about 1.5 million barrels today. To put that in context, the surplus of crude oil and liquid fuel supply versus demand in the U.S. and Canada is about 8 million barrels a day. The whole world, the price maker in the world, has shifted to the Western Hemisphere. So this kind of bounce typically is what pumps up crude oil prices in a bear market where you get the sharpest rallies. And I think most traders are looking for any type of rallies around maybe $65 in WTI so they can sell forward if you're a producer and bring on more supply. You see the bent there. It's an oversupplied market, and the number one reason it's oversupplied is it went up too much to the peak in 2022, and now it's in that bear market stage. And right now we have those up too much risks shifting over to the metals.
Mike, what about natural gas? What's going on with that commodity?
Bear market. The good news for natural gas for consumers, it's likely to bottom this year around 2. That's not profound. Last year's high was 5.5. It started to price in the potential for the second colder than normal winter in a row, despite global warming. And now we're finding out heating degree days demand is not going to increase. Natural gas right now, if you look at that April or March contract, they're right now about 2.7. 270. I think they're going to go near that level. So within a few months, we might see a 2 handle. And Mr. Trump definitely has that in his favor. He has pre-existing trends of energy prices going downward in his favor, and it's probably going to continue. The bottom line, remember about natural gas, is every time prices pump up to their 4 or 5, U.S. supply comes back on a lot.